Good morning, everybody. It's a pleasure to have you here. And this is the 22nd day in the month of June 2022. My name is Heritage Obisa, Markets Analyst at HFM Nigeria. And as always, we check through the markets, find out what the overall sentiment is, what catalysts are driving asset prices, if they provide opportunities, and then how we can take advantage of it. Like always, please remember that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning in terms of the overall environment is a classic risk off market environment, right? Risk off says a more negative flow in the markets where risk assets are down and safe assets are appreciating in value. And it's a classic one that we have so far today. Although the reasons for it, the catalyst for it have been fairly light. There's not really been much, new flow in terms of information, but it's what we have and we'll deal with it now in a bit. I had this written down earlier in the day and I said risk off flows, but catalysts are the same regular suspect, the same old reasons that we've had risk off over the last couple of weeks is still what we have right now. After the slight improvements in risk assets that we had, since the start of the week, Monday was a little bit slower. Talking about the bank holiday as well Monday, but Tuesday we had a little bit of improvement in risk sentiment, even though the margins were still small, right? But right now, markets focus have turned back, to the global growth fears amid high inflation. The main reason why we've had that downside in equities, coupled with as well central bank tightening, central bank mopping up, right, also in fear of high inflation as well, or in an effort to cut down or to curb sky high multi-decade, inflation, right? As a result of that, equities trade broadly lower today, right across board. You look at the US 500 F, the futures contracts, is down by 1.7% at the time of writing here towards 3700, level. Look at the commodity space, broadly lower as well across board, right? Oil prices actually took a bigger hit, right? You look at US oil is down about 5% so far today, as a time of writing. And apart from the risk of flow as well, we've had demand worries add to its woes. OPEC looking to increase production by 400,000 barrels per day. All of that adds supply when the demand is still suffering. Talk about COVID cases in China, that hasn't really helped oil prices, and is why we're seeing more exacerbated moves to the downside, on oil price. That said, measures of volatility that usually shows levels of fear in the market as well as even high volatility, volatility basically markets, right, all trade higher, right? And then especially the one, the VIX.F, the one that measures the US 500, right? And then clearly that follows downside that we're seeing in equities. You look at the bond yield side, also broadly lower. So it's just basically all asset classes are really pointing, to the risk of flow, that we have, right? Safe havens, you look at the FX space as well. Safe havens are also leading the majors. All of these are indicative of the risk of flow that we have in markets. Now, on the news front, in terms of catalyst, in terms of new information, there was not much fresh catalyst to drive, the negative flow that we have in markets. Yes, we had UK CPI earlier in the day, but it was mostly a mixed data. Year-over-year print was basically as expected. Month-over-month print was, higher, but core print was lower, just all over the place there, but not much in that space, even though the pounds remained one of the major laggards in today's session. Apart from that, we also had, some story from, Europe in terms of France, where, one of them, talking about the inflation rate as well in France, even though France has one of the lowest inflation rates right now, at least in Europe, not as bad as some other countries there, like for example the UK itself, right? But that said, we had some story as well from the central bank front, where Fed member backing was also back on the hawkish side. But all of that was not, or were not really major reasons for the risk of the you're seeing. I mean, not really tangible enough reasons. And mostly analysts point to the risk of the you're seeing as still the same old, bigger picture, in the markets, the dour picture concerning growth outlook, where the markets are expecting the global economy to slow down Recessions are a big worry going forward. And even central bank tightening monetary policies as well, which also slows down business in its own way amid high inflation. And right now, markets are latching onto that narrative in the session. You look at the FX space, classic risk off as well. CHF sits at the top of the majors. Remember that we had the SNB, pivot recently from a dovish stance to a hawkish stance by hiking by 50 basis points and even looking to hike some more, right? Clearly, that also has helped the CHF, coupled with the risk of the we're seeing right now, also helping it even more. And then you have the dollar also show risk off there as well. Even though with lower bond yields, you want to be careful with that one. And then yen is also as well taught in terms of the leaderboard. But you must not forget what we have in terms of the Bank of Japan and the recent overall negative flow. So if you're going to go into buying the yen against any of the major currencies, you don't want to hold that for too long, considering the long-term bias for the Japanese yen. On the other hand, the NZD is the laggard on the session, lagging down the most across major FX. Pound also down as well. And then you have the Australian dollar. All these hybrids of currencies down, while the seven currencies lead. Look at AUD for example, it's broken through 0.67. That's been a key area of support all through the week. We look at Snibit. NZD as well has broken through 85.5, while pounds, pounds USD struggles around the 1.218 level of support. And then you look at the day ahead, right? Classic risk off, you can look to buy the safe havens against the hybrid currencies, even though you want us to keep your risk managed and pay attention to the overall sentiment. But what we have right now is risk of flows. And you look at the day ahead, yes, a couple of central banks speak on the wire, a couple of them from the ECB, from the Federal Reserve, Chair Powell and SMB Chair Jordan as well on the wires as well. So there's that to put at the back of our mind. Some from BOC too. And then we have inflation data for Canada itself. But aside from that, it's still going to be about this overall catalyst overall flow in the market. Risk of right now, seven currencies are down, hybrid currencies are up, safe assets are, I meant seven currencies are up rather, hybrid currencies are down. Risk assets generally are still down as well, while safe assets generally are still up. I'm quickly looking across board, just a quick look at charts, and I will call it a day from there. For a quick one, this is, first of all, these oil prices. Right, we had a strong downside as well. Right now, this little pullback has seen us move back lower than 5%, now at 4.70%, and that has really been, in line with the risk of flow. Now, I like this because you look at the kind of upside that we've had over the last couple of months, right? Going back to November last year, right? It's been pushed by global for recovery, all of that, and then fears right now in terms of slowdown, because slowdown would also not help oil prices, right? That has also seen oil prices make some lows after, retesting the highs going back to February. So this is March, mid-March, early March, thereabout in the year. But so far today, we still have that, downside that we're seeing in oil prices, right? The next key area of support will be this $100 per barrel level. That's an interesting one to look out for. It was for a couple of weeks, going back. Just a moment. I'm not sure why it's not loading up just yet. All right, we'll come back to that. I'm not sure why it's not loading up. But let's quickly look at the major currencies. We'll come back to equities and oil in a moment. Now, looking at NZD as one of the laggards and CHF as one of the strongest currencies, I want to look to pair NZD versus CHF. Now, looking at today's session already, it's already down margin down by 1.12% thereabout. About 73 pips down. ATR is around 82, so we've almost used up the ATR. So if you want to look at this, first of all, I wouldn't be looking to chase lower where it is right now because we used up almost the entire ATR. But any rotation back towards this key low levels we had going back to the 17th of June, we had a pullback, but we didn't really get there, even though this would have been nicer. But if you can get another rotation back towards this level, or even this highs here, I wouldn't mind looking for further downside on this particular one, even though the best will have been this 0.61. But we can settle for this. And you're looking at target levels, you're looking at areas of target. There's really not much in our fronts, right? If you want to go back, way back, right now we're trading at area of support level around 0.605 key round number. So you want to be careful there. But if you clear out that level, I think anything back towards 0.6 would be the next interesting area of support, right? This will be the next interesting level area of support. So if you can have a retest of this looking for a downside, even though we have cleared out the ATR, so I'm preferring the pullback, or better still, the pullback here and just getting out at the 0.605. I think that could be one to look out for. You look at AUD CHF as well. Another interesting one on this particular front. We had massive ranges all through, coming from yesterday, Tuesday, Monday, even going back to Friday. It was just in one space, and then we broke through early in the session, broke through 0.67. We tested it clean, which was the key area of support, going back all through from Monday going back to even Friday, and now we've continued lower. This will have been the best entry opportunity, but if you can get another rotation back to this level, that wouldn't be bad, especially heading into the session later today. And in terms of targets, it's also another tricky one. We still have some room, about 40 pips to run in terms of the ATR. So, I mean, there's still so much that we can still look for. Next area of support, okay, we're close. 0.665 really is the next area of support around here. So, any rotation back, if you can get a rotation back towards level, if sentiment remains risk off, you can look out for further downside towards this next key area of support 0.665. You can look at the CAD THF as well. Similar story there. Low oil prices, although CAD has not really been one of the weakest currencies so far today. We've had a little bit of chop. It's a bit weird because oil prices are down, then CAD is not as down. Although in recent weeks, CAD has not really been able to follow, has not been following that, close correlation with oil prices. So I'm going to leave that out for now. Pound CHF is also another interesting one. Where's it? Pound CHF. Interesting one to look out for as well in today's session. We've had strong downside already. We still have about 50 pips to go on the ATR. Now we broke through this key 1.18. That was a low going back to the 20th of June. Interesting area there. Just look at this. Right now we're retesting it. This is not a bad idea, and then we could look for further downside from this particular one, here as well. If sentiment remains risk off, area to anchor our risk, not just far above. In terms of targets, and we have a key area here. Why do I have that red line there? Let me look for why I have a red line there. Okay, this is set is overall 1.175. I think that should not be too bad. 1.175 should not be too bad an area, to look out for in terms of targets. This should be around 50 pips thereabouts from here to here. Okay, around 50 pips. I think this is not a bad idea on this particular one. And then you have like that's for CHF. If you want to cross over to looking at the dollar or JPY, for example, NZD-JPY, interesting one. We broke through the lows of yesterday. Key area of support here. We retested it, looking for the downside. Although in terms of this, we have really gone past the ATR for today. So I mean, this might really be out, right? But you look at something like pounds JPY as well. We could look at this as well in terms of today's session. Not too far behind. Let's just look at. All right. We've moved already today. We still have about 45 pips to go in terms of the ATR. How can we look to play this? Right now, we're trading at support levels. I mean, previous resistance level around the 166.00. You don't want to be selling into support. So, I mean, you don't want to be looking at that. But any rotation back towards preferably this, the lows of Asia around 116.5. Maybe that could be one to look out for, and then look for a downside on this to back to this level. We could look at that. But I mean, you want to be very careful with something like the JPY today. NZD-JPY, okay, I mentioned that already. I'm looking for one more. AUD-JPY, where is it? I have it open here. AUD-JPY. Let's see. AUD-JPY, all right. Let's have it somewhere. I think it should be on here. All right. Okay, so AUD-JPY as well. We could look at this, only that right now we are struggling at this key area of support here. 1, 2, 3, 4, 5. So I mean, it may be a little bit tricky to try and get in on something like this. Right? Let's mark it out for us so we can see clearly. It's a struggle. It's in the middle, but you can see clear highs, lows, and now we're here. That would be a little bit stressful. But basically, what I'm just saying is risk off. You can look to pair the high beta currencies against the safe haven currencies, looking especially the commodity currencies particularly, and even the pounds, leaving out the CAD, looking to buy the safe havens and sell, the high beta currencies, and you have for yourself a good idea for the day. Although pay attention to sentiment the day ahead, if risk of changes, clearly that changes as wow. I was trying to show us oil prices. I'm not sure why that particular MT4 is not, moving us much. But basically, you look across the equity space, they're also down across board. You look at oil prices down as well for today. Today's 22nd of June. So it's basically what we have. And like I said on the calendar, it's, a light one mostly. Yes, BOC, CPI expected, numbers expected to come in even higher than what the previous numbers were all through both month over month and even year over year. That is high. Should that change? The BOC are already on the hiking path. High inflation would only just reinforce that, but I don't think that should be more, heavily market moving. But I guess we'll have to see on that particular front. So we're going to call it a day at that point. Thank you very much. If you have any questions, like always, do not hesitate to ask, and we'll always do our best, to help. Thank you, and do enjoy the rest of your trading session. Bye for now.